So I figured out why I keep losing in Forex trading. Now, this might be the question that you ask yourself all the time. There's actually 3 tactics to getting this right. You can actually start making money right away. And in this video, I am going to give you the 3 rules that you need to follow in order for you to become an actual successful trader.
Anything is possible. Anything. Just over a year ago, I was making $30K a year with my 9 to 5. And now I'm making well over $100K doing what I love doing. And that's all thanks to Forex. Your boy Solo.
So if you don't know, I go by the name of Solo, and in this YouTube channel, we talk about trading and entrepreneurship and investing. So there's 3 different tactics that you must obey when trading. One of the very first ones is properly managing your risk per lot. Second is having the proper risk management on your overall account. And the third and final is having patience and discipline. And with all of these 3 different tactics, I'm going to break every single one down so you guys can understand what I'm actually saying. So let's talk about the very first important one, which is actually having the proper risk lot, or knowing what to risk per lot, as this is very confusing to a lot of people. So when it comes to risk per lot, what do I mean by this is, let's say that you have a overall risk, meaning that you do not want to risk no more than 10% on your overall account. What do I mean by that is simply, if you have a $10,000 account and you do not want to risk no more than 10% of that entire account, that means that will be about $1,000. So what you will want to do is, instead of risking your whole entire account off of just one lot, meaning if you get in one trade and you decide to take one trade and you enter in one trade with, let's say maybe 10 lots, right? A standard of 10 lots. What you're doing now is putting your account at bigger risk. Instead of doing that, what you will actually want to do is enter in micro lots or smaller lots. So what I highly suggest is, instead of doing $10 standard lots, if you come over here to this position calculator, which will be linked down below, this will give you that benefit of knowing, all right, this is what I need to put in this actual lot before I take the trade. So let's once again say we have a $10,000 account and we're only trying to risk either 1% or 2%. So let's just go for 2%. Let's say that we're in a trade, market comes down, pulls up, breaks out of previous structure. We notice that momentum has shifted, meaning that we are getting indecision candles and it's not doing anything, but we're getting what we call double bottoms, triple bottoms, and the market shoots up. What we will want to do is, of course, make sure our stop loss isn't too far out. So let's say that our stop loss is roughly about 20 pips. So if we do that and we enter in Euro USD, now you can go in any other pairs they have. Unfortunately, they don't have indices in this particular one. But let's say that you're doing a major currency. What you want to do is hit calculate, and it's going to tell you exactly how much you need to invest in. So if you are trying to risk 2% per lot, not overall count, that's one big mistake that people make. Per lot, you're basically looking to just have it at 20 pips out. Now, let's say that we do 10 pips out. Now, our standard is 2 lots. So we can do a standard lot of 2 lots. And that's basically what it will look like if you are entering this in your MetaTrader 4 or MetaTrader 5. So after you establish that, that is basically what you need to do moving forward. So when I break down the strategy later down in this video, you guys will understand why we're doing this method, because this method is actually what's going to grow our account with basically minimizing our actual risk. So now that you understand, when you are trying to get in a trade, you first want to make sure that your lot size is up, or your risk is low per lot, so you will be safe per trade. In every trade you continue to get on, you can compound your actual account without having so much risk. So now after you establish that, the second thing is risk management on the overall account. Now I have multiple strategies on going about figuring out how to actually have the proper risk and the reward in managing your overall account. Now, one method is, let's say that we want to get in one trade, right? Let's say that we want to enter in one trade. So what we're going to do is a long position here. Let's say that we're looking to have what we call a risk to reward of a 1 to 2. Now, the best thing that I highly suggest is doing anything over 1 to 2. So let's say that your TP is from your previous high, which we will talk about later in this video. But let's say that your TP is the previous high. So let's just go ahead and map out the 1 to 2 trade. So here is how you would basically have this amazing risk to reward strategy. So let's say that you enter in a trade right here and you took TP right here. So now what will happen is, and this always happens with the market, is market will always respect previous structure, previous highs, previous lows. So let's say that you enter in this trade right here, you took your TP right here. What's going to happen next is market is then going to shoot back up and most likely create a new high right here. Or if not, it will basically come back here and do some consolidation, maybe a little pullback. Once you get that pullback, that is when you enter the market either again for another small lot. In this case, since we have a $10,000 account, we're not risking no more than 1 or 2%, but we're having an overall risk on our entire account of 10%. So remember that. If you multiply all the lots that you're in to the 10%, then you will know that, okay, this is all I need so I won't over risk my account. So now that you are entering in this trade, you enter right here. Now that you enter right here, let's say that you are still most likely going to hold this trade. Let's just say you did not take TP here. What's going to happen is you can either move your stop loss to either half or to break even. Now, the benefit of moving your stop loss is a huge benefit because now you're putting your risk very, very, very low now. So that being said, let's say that the market, and I've seen this happen all the time, market comes to this previous high right here. Market comes up, consolidates, create a flat pattern, and then it pulls back up. Well, guess what? You're now in this trade still, and now you're in a brand new trade, and your lot is still what? Two lots. You're doing the standard of 2 lots. So now you're in 2 trades. So since you're in 2 trades, what you're doing with the very first trade is you're just moving your stop loss to previous structures, previous lows, previous lows, previous lows. Every time it creates a new low, you just move it. Once you get to that level of knowing your gains, let's say that you have a gain per day or per week, maybe it can be 1% to 5% to 10%, whatever your gains is, you reach that gain and you get out. So I now have this journal that I will link down below. If you guys want this journal, you definitely can use it. But what this journal does is basically helps you log in all of your trades. So let's say that we have a $10,000 account. This is initial capital here, right? And I just already had put in some numbers here. But let's say we had one day we made like $5 grand. So one day we made $5 grand. You guys will literally see the total profits that you obviously have in your actual account. One thing that you guys can do is when you come in this section, this kind of breaks down the risk to reward, like your actual percentage of what you are looking for in your overall account. Let's say you're looking to risk 10%, but you're looking to have an reward of maybe 50%. I'm just giving the most ridiculous numbers now. Everything here calculates to tell you exactly what is going on. So like, once again, if you guys want access to this, the link will be down below. You guys can have access to that. But that's very important, guys. So having that right here is a powerful tool so you can see exactly where you enter, where you closed at, but most importantly to see, was this a profitable day or whatnot. If not, you'll also be able to see your risk, your reward, and is my risk higher than my reward? If so, then something's not working right. So that's basically how you look at that. So now that you guys understand everything with the 2 tactics, the final one is going to be the patience and discipline, which goes into my strategy. So let's go ahead and jump into the strategy so I can show you guys how you can be a consistent trader and make consistent money. All right, so now let's talk about the strategy. But before we get into that, let me talk about the discipline part and why this is so important. So first, before you guys get in any trade, you got to be disciplined. In order for you to really have that discipline, really it comes with a lot of other things. But most importantly, as far as just getting your mind right, you need rules. So here are my 3 rules that you guys must follow. Trade with the trend. Don't counter trend, but trade with the trend. Second, wait for price action momentum. After you have price action momentum, this applies with candlestick patterns as well as price action patterns like your double tops, double bottoms, inverted head and shoulders, and all of that stuff. Candlesticks goes into engulfings, wick rejections, indecision candles, dojis, hammers, inverted hammers, and all of that. The last one is wait for structure to break. We have to know if structure breaks, we know that, okay, the sellers are now taking over or the buyers are now taking over. So that is what we need to see for us to have that discipline. Without the rules, you won't have no discipline because now you're just trading, free roaming everything, not knowing exactly what you're doing. So psychologically, you don't even know what is going on with your mind. So now you guys have these 3 solid rules. Let's actually talk about it. So when you guys are trading with the trend, first and foremost, you have to know the direction of the trend. Now, I have some tools here that I actually have made for you guys, for anybody that's new or just need a simple strategy to follow. I have the 50 right here. This is my 50. I'm going to actually go ahead and show you guys 50 EMA. Nothing changed, just had the length changed to 50. And then I also have the 200 MA, and you guys can have that as well. So now, after you have that, one last thing that I do want you guys to use is the stochastics. So once you guys have the stochastics, this is the settings that I have it. It's 14, 5, and 5. That's all I change. So we're going to pay attention to the stochastics more towards the end. I just really want you guys to understand. You use the stochastic at your last option to confirm trades if you want to use it. I personally don't use it, but once again, this is a strategy for everybody. So you guys, all it works is once a new high or a new low breaks, that means that is a reverse of a trend. Another tactic that you guys can use is if your moving average is below your candlesticks, it's known as an uptrend, or if it's above, it's known as a downtrend. So we're going to look at both options. We're going to look at market structure if you were just a naked trader, or if you have moving averages and you don't know anything about market structure, it's the same exact thing. So here's the trend. As you see, this is the low right here. Let's say that we create a low based off of this indecision here, boom. Once market broke out of this low to create a new low, which is basically here, what happened is market created what we call a new structure. We got a new lower low as well as a new lower high. Now, this is when you guys will need to start looking for entries. Once you notice market has not broke this high. Now, the question is, how would I know market has not broke this high when market is moving? Right now, it looks easy to said and done. Yes, it does, but that's not 100% true. Wicks, price action momentum, is what we're looking at. So when we notice that price did come and created a lower high, this would not have been my entry. Now, if we take out the stochastics, it might show, oh, you still could have sold it. Yeah, you could have, but stochastics, if you just trade with stochastics, for those that know, we all know it's not that easy. It's not. So instead of us just doing that method, we need to wait on more structure and price action momentum. So what I need to see is this level right here being respected twice or 3 times. As long as I can see wicks, if I'm getting wick rejections in this level, if we create a zone, I don't usually use lines, but if we create a zone around this level and I get wick rejections, following up with a price action candle like an engulfing candle or a doji or a hammer or whatever, shooting star, any of those sorts, I'm interested in the market because now I see that too, my moving average is above, and when your moving average is above price, you look for sales. So for anybody that don't know about price market structure, this is what you're looking at. If your candles or if your moving average is above your candles, you can then look for those selling setups. For everybody else, if you know structure, if you know market structure, if you don't know, make sure you follow me. But if you don't know, subscribe to my YouTube channel because I talk about this all the time. But you guys can literally look at this and you can sit here and say moving average is aligning and structure is aligning. So now I'm looking for entry. So what I'm looking for is engulfing candles. So seeing that price is basically respecting this zone, moving average is acting very well. Now, if you want to take out your stochastics, you can. However, our stochastics didn't give us really any signals. Don't worry about it. That's just the last option of confirmation. Regardless, this is the 3 confirmations we need. The last one is in bonus. All right. But let's say that we get in here. Let's say that we enter. Now, this is US 30, so the pip count is going to be way off as far as how I'm counting them. But let's say that you do a 1 or 2 with a 20 pip or 20 point stop loss. This is your trade right here. Now that you had took this trade, what can you do to compound this to grow this account? If it's small, large, or whatever, this is what you do. Now that you took this trade, and let's say that you had a 1 to 2 trade here. Now what you want to do is move your stop loss to break even. Once your stop loss is break even, this trade is absolutely risk free. This is where discipline comes in again. Do you want to be greedy, or do you hopefully want to be 50-50 where you're losing your money or gaining more gains? It's up to you. You play with the fire. I'm not playing with it. I know what I'm going to do. It's all up to what you're going to do. So me personally, I'll move my stop loss to break even at this point, and then I'll re-enter after structure forms again. Once we get a new low, which we did right here, I'm going to wait on a lower high, meaning market can come anywhere. Guys, please don't follow that rule where market breaks out. If it doesn't pass this previous lower high, don't look for yourselves. No, market can come all the way back up here. As long as it does not break this high, I am going to sell it again. Even though it didn't do that in this instant, it actually just did exactly what it should have done, which it basically came up. And then we had this beautiful pattern right here. So let's go ahead and pull out this. Now we're in another trade. Let's say we have our stop loss 20 pips out, and we do another 1 to 2 trade. So guess what? So what does this mean for this trade? Now for this first trade, we're now, once we figured and established that we have a new lower high. How do we know that? Based off my 3 rules that I told you guys here. You see we got an engulfing candle. It had hit this area. I don't use lines, by the way, guys. I use zone areas, just to let you know. But it had hit this area, didn't break. We had an engulfing candle here, or for safety, you guys could have entered somewhere around here. Regardless, once we had that form, now I move my very first trade to TP1, or to the previous lower high, right? So now I'm just basically trading risk-free with gains for my first trade. Second trade hit profit, boom. So now we just basically won 2 trades. If you guys are done, let's say your profit gains had hit, exit out the trade. I don't know how to stress this enough. Exit out the trade. You're done for the day. So that being said, guys, that's pretty much how the strategy works. Now, if you guys want to use the broker that I use, I highly recommend signing up with them down below. The link is in the description. Also, if you guys ever need any actual extra assistance, from signals to mentorship classes, I teach that. My swing traders teach that. I have specific traders that trade gold, trade indices, cryptos. We all give that knowledge in our Discord community. So if you guys want to sign up, you definitely can. That link is down below. Other than that, guys, I appreciate the love and support. Make sure you like and share this video to help the YouTube algorithm so this channel can grow, and I can give you guys just every video drop gems. Other than that, I appreciate the love and support. Your boy Solo. I'm out. I'll see you guys in my next video. Peace.